I've got a big problem with Jack Dorsey-led companies, and it's not his liberal politics or his nose ring that bother me the most. What is going on, investors? Hopefully you guys are doing well out there. Time to talk about Block, otherwise known as Square. Still has the ticker symbol SQ. Over the last year, the stock's down pretty big, down 58%. Year to date, down 41%. Come over and look at this from a technical perspective as well. Now, while I said I don't like Jack Dorsey-led companies, from a technical perspective, it's actually done some interesting things over the last few months. We'll talk about that, but we've got to get into the fundamentals. We'll take a look at the most recent quarter, which has the stock popping in the after hours after being down by about 10.5% during the regular trade. It's one of the few stocks that is popping in the after hours after reporting their Q1 numbers, and we'll get into them. We'll take a look at this revenue coming in at about $4 billion. That was a 21% decline. They also missed expectations by about $180 million. You're probably wondering, how is this stock going up in the after hours after missing revenue by 21%? Well, I tell you what, if you've been following the channel and if you learned anything about Square's statement of incomes, their revenue going down is not necessarily a bad thing. When we get over here to the financials, I'll show you there's some fantastic stuff going on when it comes to the products that Square and Block operate. Now, I didn't see any evidence of the company giving any kind of guidance for the upcoming quarter, so we'll have to assume that analyst estimates will be what we rely on with this company. Now, we had that decline in the most recent quarter by about 21%. Wall Street was expecting closer to about an 18% drop on that revenue side. They're expecting the upcoming quarter as well to decline by about 2% on that revenue, then reaccelerate to kind of mid-20s growth really into the foreseeable future over at Block, at least into 2024. But I will talk about in a second why revenue and how much revenue Block generates, not necessarily the full story, not even something that I would really care about. Again, I'll show you the intricacies about this company's revenue model. Probably what's more exciting about Block is the fact that analysts are projecting massive profit growth in the coming quarters ahead. Maybe that all-important share-based compensation is going to get reduced and earnings are going to start accelerate, because I'm seeing like low 50s to high 80% growth on that earnings side in the foreseeable future for Block. And I tell you what, if they can do that, if they can pull them off, there is some recipes here for an interesting stock. And then certainly from a technical perspective as well, interesting stock, but there are some things I'm going to caution you about. I'll get to those in a moment. Now, PayPal Square may be challenged by Amazon's buy with Prime. I don't know who the heck think this is going to happen. A lot of people in the retail space view Amazon as a direct competitor. Would you run your payment processing through a direct competitor? The answer to that question is absolutely not. Amazon buy with Prime is more than likely going to be a niche product, is not going to be something that we hear about on a regular basis from Amazon from an earnings and a profits perspective. Now, I might have just jinxed it and it turns into the next $3 billion product for Amazon or the next AWS, but I really don't think so. I don't think they necessarily have a competitive advantage here from a pricing perspective, from a technology perspective, and certainly from a competitor's perspective. I don't know why any competitor would want to run their payment processing through Amazon. I think Square and PayPal's business is safe for the time being. Now, Affirm gained on speculation of a potential takeover interest. This relates to Square a little bit. They made that acquisition, I believe it closed last quarter, of Afterpay. They paid a huge amount of money, or they really leveraged the stock in order to acquire that company. Affirm is obviously in the same space. I don't think regulators would allow Square, or in this case Block, my apologies for interchanging the old company name with the new company name. I don't necessarily think regulators would allow them to roll up another buy now pay later, but this would be interesting if the business units continue to consolidate in this segment. Now, Block's price target was raised to $190 over at Mizuho on the team's use of Cash App. When we get over to the numbers, I'll show you Cash App doing incredibly well from a revenue growth perspective, profitability, everything firing on all cylinders. I think this was some good research. Now, whether or not Block can get back to $190 per share, currently sitting at about $105 per share. We'll see if that happens in any type of short order. I tell you what, if these earnings estimates are true and the company, it really accelerates these earnings, based on the revenue growth that this company would likely achieve as well, some good things could be happening in the future for this stock price. Now, moving over to the revenues, we see the declines on that revenue. Last year on a quarterly basis, we're at over $5 billion worth of revenue. This year down to 3.9. But remember, the interesting thing about Block is they recognize this Bitcoin revenue and they recognize it dollar for dollar. So as you're moving Bitcoin around, they actually recognize that as revenue and then they subtract it out down here at cost. And look at Bitcoin revenue in the most recent quarter, $1.7 billion worth of revenue and nearly $1.7 billion in costs. We've talked about how this is a mega low margin business. I mean, they're still making tens of millions of dollars, but this really skewed their revenue number for many, many quarters in a row. Because look at last year, Bitcoin revenue nearly doubled to $3.5 billion. So as the air comes out of the Bitcoin balloon a little bit, well, all of a sudden the revenue from that business unit starts to decline. It certainly looks year over year that the revenues are hurting over at Block, but that's not the case. Because look at transaction-based revenue. Went from $960 million up to $1.2 billion. You love that type of growth. And then you've got this subscription and service-based revenue. You got to love this even more. You went from $557 all the way up to $960 million. Hello. And then look at the margins on these businesses. Off the $1.2 billion in transaction-based revenue, you had $718 million in cost. And this is what's even more exciting over at Block. Off of $960 million worth of subscription and service-based revenue, you had just $195 million worth of cost. So you've got gross profit over the last year on a quarterly basis actually go up despite the over 20% decline on those revenues. Again, actually all of that attributable to low margin Bitcoin revenue. Well, look at your gross profit. It went from 963 up to 1.3. They're doing a phenomenal job growing revenues over at Block. Now, what are they also doing over at Block and doing a phenomenal job of? Well, every Jack Dorsey company I've ever looked in does a great job at growing their expenses right along with their revenues. You went from 310 to 484 on the product development. Look at sales and marketing. You went from 350 all the way up to over 500 million. Look at general and administrative. You went from 195 and you more than doubled it all the way to 444 million. And look at transaction and loan and consumer receivable losses ballooned from 20 million to 91 million. You think businesses and consumers are having a tough time with that $6 gas? Here's evidence of it right here. Nearly a 5-fold increase on loan losses. If that trend continues, not necessarily a negative thing for Square or Block, but certainly the other banks out there. And it certainly paints a picture the consumer is tremendously weak as they continue to mount on transaction and loan losses. But our total operating expenses, hello, $895 all the way up to $1.5 billion. So unfortunately, you take this $1.3 billion and you take one step forward and two step back because you had operating expenses coming in over that at $1.5 billion. That gives us an operating income of a negative $226 million. You went from an operating profit last year of $67 million all the way to a negative operating income of $226 million. This is my biggest problem with Jack Dorsey-led companies. They do a nice job on the revenue growth side, but they do an absolute terrible job at containing cost, and they essentially run this like a charity for the employees and the executives to just collect massive amount of stock-based compensation, print as low profits as they possibly can. They dilute you as a shareholder. Look at this, 501 outstanding diluted all the way up to 541 in the most recent quarter. This is why I would not touch Jack Dorsey-led companies. It's just not good enough. Now we move to the balance sheet. Plenty of cash on the balance sheet, some investment in securities, all things being considered, fantastic balance sheet. They do have $4.5 billion worth of debt, but based on these operations, I'll show you this company is paying and rewarding themselves with mountains and mountains of shares in the company. Again, this is a hallmark of Jack Dorsey. Now, moving Moving on to the cash flows, you had negative $207 million net income. Again, we were positive on a quarterly basis last year at $40 million, and it's not due to the decline in net revenues. We declined those revenues by 21%, but all our high margin businesses actually increased year over year. It is because of excessive stock-based compensation, and I'll show it to you right here. Look at this in the most recent quarter. This is not for a year. This is not for a decade. This is not for the life of you and your 4 kids. This is for 3 months. Jack Dorsey and the executives over at Block rewarded themselves. Is that right? Is that $275,000? No, folks, that is $275 million. $275 million in 3 months. We're not talking about for a year, 10 years, 20 years, 90 years. $275 million. This is not the Los Angeles Lakers salary for the month. We're talking about 3 months to run Block. You had $275 million worth of stock-based compensation. That is so egregious. Last year, we thought 118 was egregious, and it more than doubled. That is an absolute disaster. So, of course, when you lose $207 million on a net income basis, but you get to add back in dollar for dollar $275 million worth of stock-based compensation, well, of course, your cash flows are going to be positive. In the most recent quarter at $229 million. Last year, you were at a loss of $29 million. The last thing I want to show you, though, is a positive. Look at this transaction-based revenue. In 2020 on Cash App, it was $27 million, then $91 million, then $109 million. The subscription and service-based revenue, $193 up to $436 up to $622. We're just continuing to grow these revenues. The high-margin business over at Square. If they could just get Jack Dorsey out of this company, well, they'd actually print some profits to the bottom line. Now, from a technical perspective, this one's actually setting up okay. I've actually almost traded this one over the past few months because, as you see, like a lot of stocks, we've made like the chef knife technical pattern where this thing was just a falling knife. When you know it's no longer a falling knife is you start to make a series of higher lows, or at least you take out the previous highs, which this stock did. They made some highs back here on February 11th, crashed all the way down here to about $90 per share, but then popped up all the way to $131. That was your technical cue that this stock, at least in the very, very shorter term, was trying to make a reversal. Now it came all the way back down here to about 96 and then rallied really hard. This was probably your place to trade it, all the way from 96 back to 141. Now we crashed all the way down like a lot of stocks. Look, it's not necessarily this stock in particular, but we're now back all the way down here to about 104. Depending on how you want to draw this kind of lower channel line in, we're still trying to form an uptrend. It's not one that's technically perfect, since it looks like we've kind of either retested these lows that we made back in March down here at about $100 per share. That's where the stock was earlier today. In fact, it was hanging out a little bit lower than that. But in the shorter term, we're still making lower sets of highs. So if the markets could settle down a little bit, wouldn't surprise me, quite frankly, if Block stock makes a rally towards the top end of this channel back over $120, $130 per share. I would not buy it. And again, I'm talking about from a shorter term perspective, a trade perspective. There is absolutely no way from a fundamental perspective I'd want to get in on a company that had a net loss of $207 million, and the executives thought it was a good idea to pay themselves $275 million worth of stock-based compensation. And on fantastic growth and fantastic margins, the company actually printed an operating income loss because they just basically doubled their salaries year over year. It's just an absolute disaster from a fundamental perspective in the longer term. Shorter term, though, I could see this stock pop. I personally wouldn't want to play the pop until you got up here, probably into the 120s, potentially confirming that this upward trend is back intact. I would take profits as you get north of about $140 per share on this one, because if this technical pattern sets up even more, you're likely to pull back onto the bottom of the channel. Now, if stocks reverse, they continue to head lower, there are some areas down here of consolidation where Block consolidated for a very long period of time, quite frankly, for several years. From 2018 all the way to the beginning of 2020, the stock essentially consolidated between about $60 and $80 per share. If the stock pulls back into that range, that can be a buying opportunity. But again, from a fundamental perspective, from a long-term buy and hold perspective, I don't see any advantages of buying and holding a stock that is diluting you and enriching the executives to the degree that Square is. I personally would only play this as kind of a short-term pop and drop type of trade. That was Block. Hopefully you guys enjoyed today's video. Back in soon with more. Good luck with your investments.